Welcome to The Interest. I'm Katie Jensen. Today, we'll see what new insights LaDonna Lockard has to share in her segment, Maximum Conversations. Then we'll hear from our own Vincent Valvo and Poetic Moments in Mortgage before getting an update from our own Sarah Wolak and NMP's Mortgage Meteorology. But first, in his 35th year doing mortgages, Norcom Mortgage CEO Phil Defronozo decided to sell off his company's retail division to CMG Financial. Now the New England native is going fully wholesale with TPO GO. Stay tuned to hear more.
I haven't been this excited in years, and it's so fun, and I don't know, I just still want to do it. And
brokers started 2024 with their highest market share since 2009. Although large companies like United Wholesale Mortgage are doing the most brokered wholesale business right now, there's still plenty of room for small to mid-sized lenders like TPO GO.
You have limited resources when you're not Finance of America or a big giant company. And where do you see the growth, and where can you place those resources? And that's really where it came to. Making a choice of 80% of our volume was TPO. That made more sense to focus on that.
The sales team at newly branded TPO GO is being led by Vice President Trey Van de Bogart, who came on board at Norcom in 2020. Van de Bogart is enthusiastic about bringing a fresh perspective to the company.
What I love about brokers is their choice. They have the choice. They find the best product. It's the best rate. It's the lowest fees. It's what works best for the borrower.
Mortgage banker and entrepreneur Rick Rock says he's always admired Defronozo's business sense. Recently appointed Executive Vice President of Retail Sales at Sierra Pacific Mortgage, Rock shared his take on Norcom's deal with NMP.
Phil's a really smart guy. He's got a lot of capital. He's got other revenue channels outside of wholesale. He's got his insurance company. So he might be able to pull it off because he's not completely tethered to wholesale.
Business leaders like Defronozo often make the decision to sell because they see growth opportunities elsewhere. But was it the right move? Only time will tell.
The timing also on the TPO side, where a lot of people were contracting, we were able to pick up some amazing account executives, some of them that are top in the country. So we're kind of blowing it out of the water, so to speak.
To learn more about Norcom's journey, visit nationalmortgageprofessional.com. For The Interest, I'm Katie Jensen.
We all dream of owning a home, but for too long, if you didn't fit the mold, you were stuck. Stuck because the system worked for everyone except you. We've changed that. Angel AI uses advanced AI technology to give a 100% trusted solution and fast answers for worry-free financing, allowing you to achieve fair and equal access to lending. Angel AI. AI you can bank on.
For The Interest, I'm LaDonna Lockard. I'm back again today with Brandon Treadway with Social Coach, Part 2. Brandon, thanks so much for being here.
I'm so happy to be here.
So, wanted to ask you something that I feel like you do exceptionally well with is keeping your authentic voice, even in social media. You have a couple of different channels. You obviously have something that's geared more toward your work at Social Coach, but then you also have something for your own personal interests. What's your recommendation for someone like me where, I'm trying on social. I just don't love it, but I feel like I need to, and I need to find that authentic voice. How do I do that?
So one of the biggest things that hurts a lot of creators is their inability to be authentic. And this is why I talk so much about consistency, because consistency is so crucial to kind of getting comfortable with recording yourself, posting those things out there. And the more that you just post, the more that you're creating stuff, the more and more comfortable you'll get on camera, the more comfortable you'll get being your authentic self. I mean, I look at my content from even 4 or 5 months ago, and I'm like, my videos feel different. They look different. I feel different in those because I was still kind of trying to figure out how did I want my content to feel? How did I want to look on camera? But now I've gotten to the point where like I don't really care about that stuff anymore. Like I'm just here to, make these videos, talk about social, talk about whatever. And I've gotten to the point where I'm just comfortable. And that comes through repetition. It doesn't come through anything other than just you do it enough to the point where you're like, oh, I'm comfortable doing this. But it's kind of like you just got to work out the kinks over time, and you'll find the authenticity. But it's so crucial to do that because people can tell when you're being inauthentic on social media. It's like so clear and apparent through the screen. It's crazy.
I completely agree. Do you buy into posting for algorithm times? Is that something that you believe in, or is it just everyone's on social all the time anyway? What's the point of trying to work within an algorithm?
Okay, so I think there's like two questions at hand here. One
Break
is
them
when's the
apart.
best time? When's the best time to post? And should you post to feed the algorithm? My answer to the first one is anyone who is telling you that there's a specific time that you should post or a best time that you should post is lying to you. There is no best time to post. Everyone's on social 24/7. At least they can't tell you the best time to post. The only person who can decipher that is you. I have found the right times for me to post, and I've seen a difference in my engagement when I post earlier or later than kind of this 1 to 2 hour range that I tend to post in. And that has all come through experience, consistency, posting, seeing my analytics, seeing what times tend to get the better engagement, and essentially bringing that into my strategy. But if I just went and followed, what X website says, like I'm probably going to be posting at a decent time and I'll get some engagement because, like you said, people are kind of just on there all the time. But for the most part, just post when it makes sense. But the second thing is don't post for algorithms, but post for your audience. When you post, you'll find out what your audience is interested in. Continue to post that kind of content that they're engaging with, and you'll find success. Don't worry about what the algorithm's doing. It's important to kind of keep track of what's performing well because that will give you an idea of your audience and the algorithm's approval of what you're creating. But if you can follow what's working, you'll find success.
Do you use any external apps outside of, say, Instagram's internal feeding of what their analytics look like? Do you use something else for TikTok? Do you have another app that you like to use, or do you just rely on the data that you're given within each app?
So I use Social Coach to publish my content, which we have analytics built into the app, so you can see a number of things. We don't have all of the analytics, but if you want to get more granular on a lot of your items, you can go into the app and find those things. For me, when I want to get really specific, like in TikTok, I can see when my audience is online. Like that is in the TikTok app. I can see by hour the kind of like curve of engagement on my posts. Now, and so I can kind of use that to track, okay, I tend to get a spike. This is true. I usually post between 4:30 and 5:30. Anytime in that range tends to be my sweet spot. And I tend to get a nice bump, and then I see a decrease around 6 to 7. From 8 to 11, it just takes off. Like a good post will take off for me between 8 and 11. Can't explain it. I'm not worried about explaining it. I think that it's mostly people just kind of like, 8 to 11 is this like 3 hour range of people going to bed at 11 o'clock, like from the East Coast down to the West Coast. And I use TikTok when I'm laying in bed. So I'm assuming that's what a lot of people are doing. So
Amazing. Well, I'm sure we could go on and on about this, but we have to keep this in our tight time frame. So we may have to have you back for a part 3. It could
I would love
happen
that.
or we're going to do extended content, maybe on YouTube. So thank you so much again for being here, Brandon, and for the interest. I'm LaDonna Lockard.
In the land of loans and rates, they reign women in mortgages. A humorous campaign with calculators clicking and papers a-flying. They navigate the chaos, never once sighing. They're the queens of escrow, the duchesses of debt. Their wit sharp as a tack, you can bet. From appraisals to APRs, they know it all. Their expertise standing tall, never to fall. They dance with documents, waltz with wealth. Their laughter echoing through the halls of stealth. In a sea of numbers, they surf the tide with grace and flair. They never hide. Their meetings are like comedy shows you see, with jokes about rates and fees, oh so free. But behind the humor, their skill untold, in every deal closed, their brilliance bold. So here's to the women in mortgages, so fine. In this crazy world of finance, they shine. With humor as their ally and expertise as their guide, they conquer the industry with flair and stride.
Welcome back to this week's Mortgage Meteorology, where we'll touch on all things to do with the overall climate of the housing market, not just in our neighborhood, but yours too. Today, let's dive into one of the latest reports from Adam about housing affordability. Adam's second quarter 2024 U.S. Home Affordability Report blew in with challenging news. Across the country, median price homes and condos remained less affordable in 99% of counties. High mortgage rates warming up to nearly 7% and record home prices at $360,000 pushed housing costs to consume 35% of the average national wage, the highest since 2007. The largest year-over-year increases in home prices were in Orange County, California, Alameda County, California, and King County, Washington. Adam's CEO Rob Barber described the situation as a stormy forecast for homebuyers, noting that humid prices and mortgage rates are squeezing affordability more than ever. Home prices jumped over 7% from last quarter, with some areas feeling more pressure than others. In many counties, owning a home now requires more than the recommended 28% of income, hitting hard in places like Los Angeles, Chicago, and Phoenix. This affordability crunch is thunderstorming over high-cost markets in the West and Northeast particularly hard, where incomes struggle to keep pace with soaring home prices. Nationwide, the typical cost of mortgage payments, homeowner insurance, mortgage insurance, and property taxes reached a sizzling cost of over $2,100. It'll be anyone's guess to see where prices go, but make sure to keep tuning in for the latest updates. I'll meet you back here with your updated housing market barometer.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.